Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After a significant downturn on Friday, following the robust US jobs report, the Australian dollar has staged a modest rebound in front of the 60-day moving average, as all eyes now turn to the upcoming US CPI data and the US Federal Reserve rate decision. Following the US FOMC meeting, it is widely expected that the Fed will keep rates on hold. However, investors are eagerly awaiting for Federal Reserve Chairman Powell's customary press conference following the FOMC decision to try and gauge whether when the US Central Bank will cut rates. However, we should not rule out maybe a possible earlier cut, given the fact the Fed is very heavily data dependent. Also, we've got before the announcement the May US Consumer Price Index or the CPI report, and then later we've got the PPI and the weekly US jobless claims. Also, we have China to release their inflation figures, or the CPI and the PPI, and Australia to update on its unemployment data. Turning to the technicals, although we are in a somewhat bearish pattern, keep an eye on that key support level, which is around the 60-day moving average of 65, 70, 80, and while intact, could see a correction back towards 66 cents or beyond there, where the key level is at 67.40, 45. After Friday's heavy sell-off for the euro, the market gapped down on Monday and now awaits for the price to be filled, and therefore could see the market back towards 108. I'm not going to get too negative on this current pattern due to the fact this is a weak hammer and therefore could see the gap filled and move on towards the region of 108.5 to 109 as a potential target. Support at this stage is seen around 107.60. A close beneath there would give some concern, as stop losses could be triggered and see a fall towards 107.20 to 106.70-75 before any bounce. The dollar-yen price action edges higher as the dollar index, which measures the greenback strength against a basket of 6 major currencies, holds around 105.05. Given the recent rejection above 157, I still am a little bit cautious on any call beyond there, and therefore could see the market take a downturn and look back towards its lows around 154.70. In light of how the market has been performing though, I still feel there is a bearish case likely to be broadly open, and therefore look down towards 155 and the base around 150 to 151. Sterling put in a very strong bounce around that 126.40-70 area and now posts a dragonfly doji that could support further gains, and that is back towards the top side range seen around this level of 128. In light of the broader call, I'm still looking up towards 130 to 131. As long as the support holds around 126.40, the bullish view holds. Having taken a significant drop on Friday, the market is attempting to recover for gold as it now trades around 2,300. In light of the heavy technicals, there is still further weakness to come, and that is towards the region of 2,286, and with the downside call, or the broader call, of 2,250 to 75 before any correction. Wrapping up with oil, the market extends after clearing the level of 76.30-60 area. From this has put a further extension towards the region of 79.30-45, with any pullback likely to be short-lived and viewing the support around 76.45 to 60. Well, that's a wrap. Thank you for joining me. As always, look out for the interest rate report, and I hope you enjoy the great start to the new day.